course, we're going to get asked this. What is the biggest risk? To me, the biggest risk is that the dollar is like the new VIX. I mean, it's not the new VIX. It always does this at this point. But if the dollar were to go up meaningfully, I think a lot of people are offsides in a lot of asset allocations and exposures. What do you think the biggest risk is in global macro right now?
Well, I think that the biggest risk is that in general what we have is a big bet on synchronized growth.
Right.
But synchronized growth has been driven by synchronized debt, and debt is the key factor here. So the moment that we have an uptick in the perception of risk of fixed income in emerging markets and in growth economies, you can see that reverse that we mentioned before. So to me, that's the biggest risk. It can be obviously driven by slowdown in China. It can be a combination of factors. I think that in general that is the biggest risk. And as you were mentioning before, the unwinding of that trade. This is what people tend to forget. Doesn't happen slowly. It happens super quickly. We saw it in 95, 97. We saw it in 2007, 2008. It goes like this. When it unwinds fast. And that's what you have. That's why you have to consistently look at the drivers that either cement or negate the what is driving the trade in order to be prepared. And I think that is why I always pay attention to what is actually happening in terms of relative to consensus estimates.
Yeah.
Remember that we're not in 2016. In 2016, everybody was bearish about 2017 because of ECB unwinding QE, because of political risk, because of Trump, Brexit, you name it. 2017 to 2018, everybody's bullish. So what we need in order to keep that trade is not that the data is in line with estimates or slightly down. It needs to be meaningfully better.
Yeah.
And that's what I don't see.
No, that's right. I mean, if you look at the technology expectations, for example, okay, right now as we're talking, the NASDAQ's still hitting or at least testing all-time highs. Do you think that the expectations have gone up a little bit? I mean, tech earnings growth last year in Q1 went up 22% year over year and shocked the bears. That happened in April. That got it going, and it really continued. Even the most recent quarter, tech earnings were up 22%. But eventually they have to cycle against those earnings, i.e. they have to cycle them this April. And I think that that's an interesting one in particular. But I thank you because you make me think. You make me think too much. Ahead of the weekend, you're making me work now. I got to work.